Good day, everyone. It is Sunday, the 20th of September 2020, and it's just gone past midday. So I'm just doing my sort of market analysis on the global indices, starting off here with the Dow out of the US. And so just quite a lot of stuff has happened. So just to be aware that, you know, we have US elections coming up, and early voting has already started. And on top of that, we've got kind of an icon of justice. Ruth Bader Ginsburg has passed away. And so there's a lot of kind of, I guess, sensitivities and a lot of kind of potential uncertainty going on out of the US at the moment. And so this could, you know, in addition to that, could add some potential volatility or uncertainty to the markets. So taking that into account, this week there's no real massive news that I could see that should add any, at least scheduled news that could add any volatility. So just taking that into account, having a look at this. What I do note on the daily is that we do have a lower high. We've broken the previous uptrend, we've produced a lower high. So generally, that would be an indication the market is potentially going to consolidate or break lower. Looking at it on the weekly, as I said, that uptrend is still very much intact. So no concerns over there. That's all looking pretty healthy. The monthly is up at all-time highs, potentially encountering some resistance, producing a bearish candle at the moment, which could, at some point in the future, we could look back and this could turn out to be a swing high. So there's just all of that happening at the moment. So what I'm going to be looking for this week is, from experience, I know that these levels of support can often hold, more often when they're not, and therefore I'm prepared for price to potentially hold at these levels of support and then continue to recover or to kind of tread water. I'm just noting that this in most other markets would historically be an indication of potential weakness, and therefore break below 27,000 could indicate a move down towards 26,000, and if it does that, it's going to be relatively quick. It is overextended on the monthly time frame, and of course a pullback would be nice and healthy. It would be a nice healthy correction. The weekly is bullish. So this is very, very similar to what's happening in the currency markets with the dollar index, with the euro dollar. It's also very similar to what's happening with gold and commodities, and that's unusual. It's the first time that I've encountered that. I'm not sure if that is significant or not. I don't want to give it meaning if there is no meaning, but it is interesting to see a correlation where the weekly across pretty much most of the major instruments are looking, or asset classes are all looking relatively bullish and consolidating, and the monthlies are looking as though they have that potential for a correction. But it is there, and I think it's worthwhile just observing that. Looking at the S&P, S&P has actually now broken the low. It is officially in a downtrend. Usually when the daily goes into a downtrend, the very first thing that I look at is the weekly to see if there's a weekly retracement. So price is still above a monthly support level. It is still capable, that's an indecision candle, it is still capable of maintaining, of continuing and resuming this monthly uptrend to the upside. It has produced a bearish, so far a bearish monthly candle here off that historic, you know, highs. It is overextended, and again, in isolation, this would be the potential for a swing high and then a correction on a monthly time frame, basically. So that monthly in isolation shows the potential for move to the downside, which would be a healthy correction, not a change necessarily in the bull market, but just a correction. The weekly is still in an uptrend. So there's two charts there that show, or at least one showing there could be a correction within a bull trend. This one showing that it's ready to resume to the upside, and the daily showing a potential correction to the downside. So again, similar to the Dow, we haven't broken this level of support yet, so there is a possibility we could rebound from this and continue up. A key for me would be breaking this high here would mean that we've now, this downtrend is now finished, and therefore we have to, I'm going to wait and see what the market's going to do next. A continuation of this could see moves down to the downside. So again, is that I just feel like there's been a lot of that this year, and it actually makes sense. It isn't just, this isn't normal. I would say that generally the markets are giving some clarity as to what they want to do, but lately, certainly in this year 2020, which is typical of 2020, when you think about it, there's a lot more uncertainty. So again, going down to the NASDAQ, and I think this is very significant, this being the most bullish and certainly the most overextended. We've got actually so far a bearish engulfing candle, which is also a solid sign of a credible potential turning point for price to correct. Back down to 10,000, I think, is a minimum. Certainly a move down towards 8,000, I think, would be on the extreme side, but not outside of the realm of possibility. So this area here that I've highlighted in the moving averages would be a monthly correction. And you can see both a monthly and a weekly correction here, which is where we are at the moment. So actually, again, this area here is still valid in my mind for a healthy weekly correction, but a monthly correction could still be in play. All right, so that does imply that there is a real possibility this week the markets could head down towards the next key levels. If that is going to be the case, I do find it interesting that, ironically, Nasdaq being the most bullish of the bunch, it is now the most bearish of the bunch, and so, but it doesn't mean it can't bounce back. It's quite capable of bouncing back. Look at the Russell 2000. It actually looks more bullish than bearish. It struggles with its level of resistance, but currently it actually looks keen to continue to the upside. It's also overextended and has an indecision candle on the monthly, but that weekly is just that little bit more bullish, which is worth noting. And again, we've got here the FTSE. Although this is weaker and it's in a downtrend on the weekly as well, it has managed to stay above support and is not looking inherently weak. So that I find interesting. If generally speaking, it's the US markets that are the most bullish of the bunch, that means that if the non-US markets are still looking bullish, then that is potentially an indication the markets are not inherently weak, but maybe just looking for a correction. So again, we've got the DAX coming up to the all-time highs. No doubt it'll encounter a bit of resistance up there. It is still in an uptrend, and so that is not giving any clues there. We've got predominantly here looking at the French CAC that's going sideways. Nothing magical about it, but definitely encountering some strong resistance on the monthly time frame. Just skipping down, looking at the Nikkei. Nikkei is looking bullish so far, looking really nice and bullish on the daily, but is now certainly running into interference at the top. But again, not super weak. And then finishing off on the Australian one, which has produced that swing high now, which shows that, again, this could be that potential for the downtrend to resume. So this is what's going to happen if the market continues to be weak. I'm going to be looking for shorting opportunities on the weakest ones, and absolutely the Australian ASICs will be first on my list, potentially followed by, say, the FTSE, just because they can be generally weaker and more bearish. At the same time, of course, I'll be keeping an eye on the US markets, and if they do continue to head low, I'll be looking for shorting opportunities there. But from experience, I've seen them recover and rebound relatively quickly, and so I do want to be very cautious with regards to that. So that means that I'm aware that we are due for a correction. I do believe we are going to get one at some point. I'm just very cautious because I've seen the US manage to rebound from that, and so I want to see more of that evidence. I want to see the market head lower, and so for me, I'll be looking for certainly on the 1 hour to 4 hour timeframes, I'll be looking for bigger moves to continue to the downside. But there are clear, rational, there's a lot of evidence here to support the idea that this could be the potential beginning of a larger correction within a bull market at this point in time. So it means higher risk, more caution, certainly in terms of trading to the upside, but it doesn't mean that it couldn't finish the week if it manages to recover. It certainly does mean that there is the potential here for moves to the downside, because we already have confirmed downtrends in multiple US markets. And so for that reason, it means that the opportunities may lie in moves to the downside, but it does also mean that there's risk in that because, as I said, the markets can recover.